Hey, Courtney Smith here, and I want to kind of examine Apple, another mega cap stock, one of the leaders of this big rally, and also one of the leaders on the way down as well. So let's take a look at it from a fundamental perspective. Let's take a look at it, and let's try to answer the question, should you buy, sell, or hold? Let's take a look. So I'm looking at a weekly chart here. I'm using a service called Market Smith, which is a bit pricey. So I'm not necessarily, it's a fantastic service, but I'm not recommending it because of the expense. But let's take a look at some of the fundamentals and technicals. We're going to start here with this weekly chart, and let's take a look. So first of all, market capitalization, $2 trillion. Unbelievable. That's been in the news all the time. So everybody knows what Apple is, so we don't need to look at that. EPS rating here in the upper left-hand corner, and that's 87. That's actually very good. Let me better put some specs on to make sure I'm saying the right numbers here. Yeah, 87. Now, it doesn't get any better than 100, so that's a good, solid number of good, solid growth. Okay, so that looks pretty darn good. EPS growth rate, though, 10%. That's nice, but that's not that great. You know, a utility company will grow earnings almost that fast. So that's only okay. Now the PE ratio, 34. Well, let's take a look. So at a 10% growth rate, that's a very high PE. That means the stock is way overvalued. If we look over here to the left-hand side, we see that earnings are expected to grow 9% this year in 2020 and 19% next year. And of course, coming up, I think on the 15th, we're going to hear about the iPhone 12. So 9% this year, 19% next year. Notice the little red arrows show that the analysts are actually lowering their expectations of earnings, and that's bearish. If the analysts are downgrading all the time. They're not downgrading, it may still be a buy, but they're downgrading what they expect to happen in the future. So once again, a 34 PE with 9% growth and 19% growth is really quite overvalued. So the first big knock on Apple is it's overpriced. It's overpriced. Now let's take a look down here. Management owns 1%. That's pretty normal for a huge mega cap like this. Banks, 1%. Okay. Now this was, I found, quite interesting. Funds only own 29% of the company. Funds are the big movers. They're the big dogs that drive stock prices. So they have lots of upside potential. I always think of about 70% as a cap on how much the funds can own, but easily 50% of many companies, they own 50%, 60%, something like that. So if we're at 29%, there's lots of latent upside buying potential from the funds. So that's in the background. They have to get motivated. Now let's take a look right here at the technicals. Now once again, we're on the weekly chart. A couple of things. 95 right here, RS rating 95. That means that the stock has outperformed 95% of all other listed companies in the last year. That probably doesn't come as a big surprise to you because of the way the price action has gone. And actually, I find that bullish. But let's take a look at it from another perspective. I'm going to come over here and I'm going to hopefully, if I got this right, draw a line. There we go. So we've got a trend line here, and down here, this line right here, this is the 200-day moving average. There's the 50-day moving average. These are day averages. But you can see that what's happened is that the market has gotten way overextended to the upside. It's gone way too high. If we say that a normal bull market is a 45-degree angle, well, we've been going 70% over the last several months. That's unsustainable. Unsustainable. Let's go over and take a look at the daily chart to fine-tune this all. There we go. And once again, you know, we can see down here, here's the 200-day moving average, there's the 50, I don't know, that's a 10. But the market just got way overextended. It became overvalued. And so I don't like owning Apple here. Warren Buffett just announced he sold it for whatever that's worth. But if we look at this from a technical and a fundamental perspective, what we're probably going to see is the market come down to this level right here. Let's call it $100 an ounce, $100 a share. Remember, they just had I believe a 4-for-1 split. So this is after split that we're seeing here. But if we drop from roughly 120 down to 100, that's almost a 10% decline from where we are now. And that's where I think we're going to go. The stock is definitely overvalued, no question about that. And dropping 10% would drop our PE ratio down to, call it 30, still overvalued. If we look at our next objective to the downside, it's probably these highs right over here at about 80 something. 120 down to 80 something is about a 40% drop. Now we're starting to get fairly valued. But oftentimes markets go to undervalued. They go from overvalued to undervalued to overvalued to undervalued. But my downside objective here would be this 100, call it 100 level with the potential to go down to 84. So this is definitely an overvalued stock. I would definitely not be a buyer here. I wouldn't be a holder either. I would be a seller of this stock. Great company, overvalued stock, look to buy back. I wouldn't even look until we get down to 102 before thinking about buying. All right, that's our quick analysis. Talk to you later.